Okay, hi also, we're going to continue with the costs. Okay, remember the profit is the revenue minus cost. While calculating the cost, there are two different ways. In one of them, we are taking into account the opportunity costs. In the other one, we do not. We just calculate the costs that are explicit, okay? In the accounting cost, profit is revenue minus cost, and this cost be in two different ways. One is accounting cost and the other one is economic cost. Okay, in the accounting cost, we just look at the explicit costs. Okay, in the economic cost, okay, this is explicit cost plus implicit cost. And by the implicit cost, we mean the opportunity cost. Okay, in the questions that I solved earlier, there were some parts we mentioned normal rate of return. Normal rate of return. Okay, what's normal rate of return? We're going to do this. Okay, whenever resources are used to invest in a business, there's an opportunity cost. Okay, opening a candy store versus put your funds into alternative use such as buying bonds which earn interest. Okay, opening a candy store versus, okay, put your funds into alternative use such as buying bonds which earn interest. Okay, or a firm, instead of using its retained earnings to build a new plant, it could earn interest on them. Okay, so rate of return, what is the rate of return? Rate of return, or we can say that yield of investment is this. Okay, is the annual flow of net income generated by an investment expressed as a percentage of total investment. Okay, total investment. For instance, if someone makes okay, $100,000 investment in capital to start a small restaurant and the restaurant produces a flow of profit of $15,000 every year, we say that rate of return for the project is this: 15,000 divided by 100,000. Fazla mı oldu bir tane sıfır? No. Yeah, it's bir sıfır fazla. Okay, 100,000. Okay, so this is 15% rate of return. 15% rate of return. Now, what is a normal rate of return? A normal rate of return, what is it? Okay, is the rate is the rate that is just sufficient to keep owners and investors satisfied. Okay, for relatively risk-free firms, okay, it should be nearly the same as the interest rate on risk-free government bonds. Okay, so we are saying that if a firm has normal rate of return, it should earn at least as much as what it could earn from the interest rate on risk-free government bonds. Okay. A normal rate of return is considered as a part of total cost of business. Okay. Implication: when a firm earns a normal rate of return, it is earning zero profit. Okay, so this implies if a firm earns normal rate of return, it is earning zero profit. If the level of profit is positive, it is the firm is earning above normal rate of return on capital. The firm is earning above normal rate of return on capital. Okay, so let's solve an example. Suppose Jem wants to sell belts in a mobile way. Okay, so then to do that he bought a minibus. Okay, so price of minibus is $20,000. Okay, estimation of sales is 3,000 belts, and each year, and each belt, $10. Okay, $10. Each belt cost $5 from the supplier. Okay, so he needs a staff of annual wage for the staff is $14,000. Okay, and we're gonna calculate, is he going to make profit? So let's calculate the revenue, annual revenue, and this is calculated annually. Okay, annual revenue. So he's obtaining the revenue from the sale of the belts. So he's planning to sell 3,000 belts at price of $10. Okay, so this is $30,000. Okay, and total cost. So total cost is cost of belts times 5 from belts. Okay, plus 14,000 wage. Okay, so these are the cost that you see, okay? Total explicit costs are this, okay? So this is $29,000, okay? So if you are asked to calculate accounting profit, okay, accounting profit is what? Revenue doesn't change, the cost changes only. Revenue is $30,000 minus $29,000. So $1,000 is the accounting profit. How about the economic cost? Okay, economic cost. While calculating the economic cost, you need to consider the initial investment, right? So what is the initial investment? He's buying a minibus, okay? Is the cost of minibus should the cost of minibus included into the cost? No, okay. The investment is not the direct part of the cost of the firm, okay. What about initial investment for minibus, okay, and the investment is not a direct part because he can sell the minibus if he wants to, okay. So minibus is there and there is only depreciation for the minibus due to usage, but minibus, we are assuming that the GEM can turn it to a money, direct part of the total cost of firm, okay. If we assume that minibus maintains its value over time, the only thing that GEM is giving up is the interest he might have earned if he didn't buy this minibus, okay? Suppose he wants to earn 10%. He wants to earn 10% minimum return. Okay, he wants to earn minimum return equal to 10%, which is the rate he would earn if he invests his money on government bonds. The rate of interest on government bonds. Okay, so now how do we calculate the economic profit? Economic profit is what? Okay, so we have the revenue. Revenue is 30,000. Okay, 3,000 times 10. Okay, economic cost is what? Economic cost. We calculated the cost that you see, which are 15,000 from the belts. Okay, 14,000 for the wage, belts. This is for the wage plus, okay, 20,000, the cost of minibus times 10%. Okay, 10%. So this is opportunity cost. Opportunity cost of capital. Okay, and then this total cost is $31,000. So profit is, economic profit is revenue minus economic cost, okay, which is 30,000 minus 31,000, which is minus 1,000, okay. So when a firm earns a positive level of profit, it is earning more than sufficient to retain interest of investors. Positive profits are likely to attract new firms into an industry and causing existing firms to expand, okay. Positive profits will attract new firms to industry. We are going to see these in the next chapter more. Okay. And negative profits, okay, losses may cause some firms to exit from the industry, Okay. Okay, so we are gonna see these more in the next chapter. Okay. Thank you.